6, 5, 4, 3, 2, 1, 0.
Welcome back to Beyond the Ledger, and I'm your host, Shardae Layfield, where we break down the complexities that growing businesses face, from compliance and tax strategy to scaling across states and markets. Today, we're diving into an area that often surprises software founders and CFOs alike: sales tax and compliance for software businesses. How it works, how it changes, and what every SaaS company needs to understand before it's too late. Joining the podcast today are Stephen Bradshaw and Stephan Jiminez. Stephen is a partner in Bennett Thrasher's state and local tax practice, specializing in advising software businesses on sales and use tax matters, including nexus studies, tax categorizations, voluntary disclosure agreements, preparing for diligence, and implementing and helping to build best practice processes around automated sales tax software like Anrok. And Stephan is a domestic indirect tax lead at Anrok, where he builds software to help global taxpayers automate their indirect tax exposure and compliance operations. He brings a rare combination of SALT consulting experience and real-world in-house tax accountant perspective from his years at Uber, where he lived through the full tax lifecycle of a scaling company, from private to public markets. Stephan spent his early years at PwC's San Francisco SALT Group, advising on income, franchise, and ASC 450 matters. Today, he partners with companies on tax technology strategy for audit readiness, scalable compliance, and risk mitigation. Thank you all for being here today.
Thank you.
Let's go into a few questions. So before we get into specifics, why should software leaders care about sales tax right now? And what are the major risks or missed opportunities if they don't?
Yeah, so I can kind of kick this one off. Really for my client base, which is, call it small to mid-market, SaaS and software companies, the reason why sales tax matters and why they really even care, for the most part, is because, most of them are looking to sell the company at some point or take on additional capital. And during that process, when a buyer comes in, or someone that's looking at the books, they are going to hire someone like me or like Stephan, who knows sales taxes really well. And during that, what we call tax due diligence period, the buyer's diligence team is going to find every sales tax issue that they can on behalf of the buyer. And then ultimately that comes out of the seller's proceeds. So if the company was going to sell for $10 million, but there was a $1 million sales tax exposure that was found, now the sellers are only going to get $9 million because that just is usually pulled right out of the proceeds of the sale. So that's, from my experience, that's why most of my software and SaaS clients actually care about sales taxes and want to sort of get them right. Mm-hmm. So Stephan, I'm curious if you have any thoughts.
No, I mean, I think you hit the nail right on the head. I kind of think about it as, going grocery shopping, maybe in the earlier days, you'd get like 10 cents off a dented can, right? And so sales tax exposure liability, right, is effectively a dent in a company. And so the more of it that you have, right, the larger the haircut in the price when you go to sell that company. So yeah, you hit it right on the head.
Yeah. And I do occasionally have clients who, are just concerned with audit risk that, state's going to come after them. And, I do have clients that get audited, of course, and sort of the bigger you are, the more likely you are usually to get audited. And the bigger customers you have, can also lead an auditor to kind of follow the invoice trail back to your company. But yeah, generally it's sort of diligence. That's the reason.
Okay.
Yeah.
So when you think about diligence exposure during a sale or investment, how often do tax or compliance issues derail a deal or at least delay it?
Yeah, so we work on behalf of private equity companies and strategic acquirers who are looking to buy companies, and we perform like we are the diligence team on behalf of buyers. We have a whole M&A practice that's what they do, and I oftentimes or sometimes will step in on the sales tax side and look, and yeah, it is extremely common. I would say that, especially for technology and SaaS companies. Typically what I see is, if you're a SaaS company or a software company, with, let's call it like 5 million to 20 million of revenue, or maybe 15 million of revenue, there's a pretty high chance that, you're getting offers from like PE groups. And there's also a pretty high chance you have not dealt with sales taxes unless you had some, savvy kind of controller or CFO, and you have the kind of cash and capacity to actually deal with it. So, that's typically what I see is it just usually hasn't been dealt with. Once you start getting up companies that are like 25 million, and up, then there's a sort of more likely that a chance that they will have had to deal with sales taxes up at some point. But I mean, I do have some companies that are, in the multi-hundred millions that still haven't dealt with sales taxes. So kind of runs the gamut.
Okay.
Yeah. I would just quickly add on that. A lot of our, customers and frankly, between Stephen and I, we have a shared customer group at this point. And being private companies, several of them, their focus right now is grow the business, right? And so the sales team drives a lot. I like these little sayings where it's like all gas and no brakes, right? And sales tax compliance typically falls underneath that kind of a braking function where it's like, let's avoid the friction here. Let's just grow the business. Sometimes it seems like at all costs. And software products like Anrok, right? The company that I work for, I think they make it really easy to have some of these really empowering conversations of why we should probably, pump the brakes a little bit. We can get into that more like down this podcast for sure.
All right. I look forward to it. Okay. So for teams trying to get their systems under control, what kind of software or automation tools have been most reliable for managing complex tax obligations?
Yeah. So, I mean, Stephan, you're with the, automated sales tax, software groups, obviously Anrok. So, I mean, I think for sales taxes, it's just so complex. You have to have automation unless you're a company that has like a handful of huge customers. I've occasionally run into that. So I don't know if you have any thoughts, Stephan.
Yeah. I would just say, yeah, we run the gambit here. So I was actually just talking to a prospective customer yesterday, and they are dealing with everything in Excel sheets at this point. There was one quote I think that stands out in my mind where their person that's in accounts receivable mentioned, yeah, when I generate an invoice, I go over to, and I'm going to just use TED, right? I go over to TED and tax, and I ask, hey, should we be applying tax on this thing or not? And if Ted's out of office, then I just have to wait, and it made me realize just how important, our tax automation software is. It's really giving time back to folks and helping just mitigate, again, any errors and liabilities that come about from a lot of that manual work.
Yeah. And I mean, for anyone that's not familiar, I mean, there are thousands of taxing jurisdictions and different tax rates, and it's just really not feasible to keep up with all of those sales tax rates, because like the sales tax rate for the state of Georgia, you could say there's not like one rate, right? The state has a rate, but then depending on where your customer is located, then you tack on the county rate and the city rate and sometimes special district rates. And all of those add up to the, quote, the tax rate. And so customers from county to county, zip code to zip code, even if they're very near each other, will have different tax rates a lot of times. And then there's the taxability of the products that you're selling, and those are changing. And there's the taxability of the exempt status of your customers. And yes, and then there's whether you've reached the nexus threshold to be required to even start having to collect sales tax. Trying to track all of that in spreadsheets is just kind of insane.
Yeah. Sounds pretty difficult for sure.
Yeah, we try and make the tracking and frankly the guesswork as seamless as possible. So we bake all that in on the back end.
Hmm.
You'll have a lot of software products out there that we're all kind of competing and doing the same thing. Um, but there's clearly some differentiators out there. Quick plug for us, I guess. We do have an exposure modeling tool that I think other software programs don't have, where you can plug in, you can connect your ERP systems, right? So whatever system that you're using to account for all of your revenue and expenses,
Hmm.
you can plug that in directly into our software, and you can feed that through, all the logic that Stephen was just talking about, right? Like Nexus determinations, is it based on gross sales, just taxable sales? Do you need to hit like a 200 transaction threshold? Assuming that you don't have like a physical presence within the jurisdiction. There's all these cascading rules that we have, and in a snapshot, what comes out, like you don't need to worry about any of that. All you need to look at is within this report, kind of like the final column, are you exposed or are you not exposed?
Right.
So it makes it pretty easy. Yeah.
Yeah.
All right, Stephan and Stephen, can you let us know, like what does it look like working together to get a common goal done?
Yeah, and I can kind of take the first shot. So, yeah, so I again, state and local tax partner. I specialize really in working with SaaS and software companies for sales tax purposes, and Anrok. As Anrok has grown, at first Anrok was kind of specializing in that SaaS and software, and I think still has a huge presence in that industry. And so it was sort of a natural, like teaming where, I would say, hey, client, you don't have a sales tax solution. You should check Anrok out.
Hmm.
And Anrok's been an awesome solution for a bunch of my clients now. And then, yeah, so that's kind of how I've found, I guess, and introduced, clients to Anrok.
Nice.
Yeah. And then maybe I can take it on the other side, right?
Yeah, yeah.
Sometimes we'll have Stephan here at Anrok. We will have customers that when they feed their financials, through our system, through our software, and they see the jurisdictions in which they're exposed, there's typically a few different ways that you can approach, an exposure. And one of those ways is via a voluntary disclosure agreement. You're going to a tax authority and you're voluntarily coming forward to say, I have some exposure and I want to pay it. And hopefully you give me the benefit of, kind of waiving some penalties and interest as one of the benefits, right? Typically it's penalties, less so interest, although
Hmm.
there's a few jurisdictions that do that. But, our company specializes in helping them understand where they have exposure, how much of that exposure is, but our services do not include, representing you during a voluntary disclosure agreement, or even, kind of going deeper into some of the factors there for
Hmm.
your options. And so it's been great to, go to Stephen and say, hey, we have, some of these customers that I think could really use your help and your insights, your experience in the state and local tax group. So
Nice.
Yeah,
Thanks
so
for adding
it's
that.
been awesome, partnering with folks at Anrok, and obviously, I know you all have to, sort of introduce companies to multiple providers, but I'm certainly happy to be one of those.
absolutely.
Thank you
I
for
try
that.
and funnel it as much as possible.
There we go. Yeah.
Okay. So, just rounding back a little bit, are there any practical learnings or gotcha examples when considering beyond tax, considerations beyond tax?
Yeah. If I can maybe take the first stab at this one.
Yeah.
I think so. My role at Anrok, I'm on the tax team
Mm-hmm.
here, and so I'm helping inform the product of what needs to be built, right? Like what's the biggest pain point. And so, having been an in-house tax accountant myself, I clearly know uh, what the pain points I have are, like what my dream list is of things that can help save me time. And in that process, I've had a lot of learnings as well that I can share with the company and even just some of our customers that go beyond tax. And so, kind of quick story, during the pandemic, I thought the pandemic was like a very interesting time.
Mm-hmm.
You had the world effectively stop, and so several companies saw their revenues just plummet. The company that I was at actually saw revenues plummet in some markets up to about 90%. And so that effectively changes everything from
Absolutely.
tax reporting compliance, right? Like how much you're required to pay in like a New York where they typically actually assess you tax based on the prior year, the same quarter in the prior year.
Mm-hmm.
And at the end of the day, last year was totally different. You had a healthy company. This year for this month, you're down 90% in revenue. You're not going to be paying the same amount, right? So just understanding like what your options are there. I think from an FP&A standpoint, like from CFO managing expectations, your
Mm-hmm.
forecast just got thrown away completely. And so during that time, I think related to tax, there was a lot of these discussions saying, if we had anything that we needed to, any liabilities that we're considering adding to like an ASC 450 reserve, right? Maybe we should try and figure out, is there anything that we can accelerate, and include it in some of these periods where we're not really beholden to the forecast anymore. It's out the door. And then there's some interesting learnings I think that we had with Silicon Valley Bank failure
Mm-hmm.
as well, where managing cash flow is a really important part of that process of, I think a traditional tax person, they want to mitigate risk. They want to help a company resolve, some of their tax liability, but they're not really thinking about, oh, I should probably make sure that I talk to, our accounting team, our finance team, right, our FP&A team who's dealing with forecasts
Mm-hmm.
to let them know, here's what the liabilities are. And as I go to resolve these, they may all come due around the same time, which is going to mean that you have a lot of cash going out the door,
Yeah.
within the same quarter. All that impacts financials and everything. So, but yeah, let me stop there.
I
How
mean,
about
I
you,
was all
Stephen?
in.
Yeah, no, that's great. No, I feel like you've got the in-house experience there that I think is really valuable that I, don't have. So I appreciate that perspective.
Okay. All right. So let's talk about what happens when a company realizes they may have prior period exposure, uncollected or unpaid sales tax. So how does this kind of exposure affect cash flow management and forecasting?
So, I mean, I think Stefan, you already kind of touched on, VDAs, voluntary disclosure agreements. Typically, those are reserved for the states where you have a large liability because you get an abatement of penalties in and every state with the VDA program. And Stefan, as you mentioned, you get interest, like Texas, for example, but they'll abate interest, but there's really not many other jurisdictions that will. But sort of long story short, that is the preferred way to limit liability because you also have a reduced what we call look back period. So if you've owed tax for 5 years, if you do a VDA, you only have to pay tax for 3 years and you get the penalty abatement. So that's typically beneficial. Otherwise, we typically recommend like what we call back filing. So basically just register back to the date where you established Nexus and then go and manually file returns back to that period. Yeah.
Okay.
Yeah, that's super important. Does what happens if you don't do anything, Stephen? I mean, is there some kind of period where if you just forget about it, maybe, like there's a time period that closes or, or do these liabilities
Yeah.
live forever?
I mean, that's a great question.
It's a good setup. Yeah. Statute of limitations does not run on unfiled returns, meaning the liability is open for forever. And I'm sure you knew that, Stefan, so I appreciate the tee up there. But yeah, I mean, yeah, practically speaking, I do get questions on like, hey, can we just prospectively file? And, typically what gives my clients heartburn about prospectively filing is the officer, like usually the CFO over sales taxes, has to, sign the sales tax registration under penalty of perjury when they began doing business in the state, i.e., what was your nexus date? What was the date you crossed the threshold where you're required to start collecting and filing sales taxes? So, and then, if the company goes bust, then the officer could also be held liable. Obviously, that's unlikely, but those are a few reasons why I typically will just tell my clients like, hey, you know, prospective filing, it's kind of a hard hurdle to kind of get over to do that. And then, yeah, very occasionally I'll have a client that maybe the business has taken a downturn and they just don't have the cash to like pay the prior period liability. And so, like I had one client that was potentially going to get acquired, and they were just like, hey, we're just going to let the buyers handle the prior period liability because we just don't have the cash to do it. So, yeah.
Nice.
Death and taxes, right? I mean,
Right.
I feel like, even during acquisitions, it's crazy to me that the liability lives on, right?
Yes.
The acquiring party, that's the whole reason why you would haircut the price, on the purchase of a company is like, well, I'm inheriting the liability once I acquire your company.
hmm
If these tax authorities come a knocking, I'm the one that is beholden to it, right? So
Yeah. Which
super
is,
important, super interesting learnings. Yeah.
yeah, which is different from income taxes. Like if you buy the assets of a company, that liability from an income tax standpoint might stay with the legal entity. But from a sales tax perspective, to your point, Stefan, there's successor liability laws that kick in that the liability follows the assets to the buyer. So yeah, they live on even in a new legal entity. Yeah.
Okay.
100%.
So, when a business discovers this kind of issue, who typically owns the responsibility? The finance team, the CFO, or outside advisors?
Yeah, it's a good question. So, yeah, I mean, I think in terms of like getting the job done, like going and actually executing the cleanup, I mean, typically that's where like our team would come in. Um, but in terms of just like who who has to pay the liability, like if I'm a SaaS company, I've been charging, my customers for 3 years, and I owe, no one has collected sales, like I didn't collect sales tax. Who owes that liability?
Mm-hmm.
Generally speaking, it depends on the state, but usually there's a joint liability between the seller and the buyer and the
Mm-hmm.
customer. But the states typically will first go after the seller because, like, if you walk into a Walmart and buy something and Walmart doesn't charge you sales tax, the state's not going to come after you first. Like, hey, you didn't, pay sales tax on this water bottle that you bought, whatever. They're going to go after the business first, and
Right.
it's the same kind of rule here. But occasionally you'll have the customer will first get audited, particularly if it's a big company, and they will pay the sales tax themselves. Um, Even if they don't get audited, they may just be sophisticated enough to recognize that you didn't charge them sales tax, but they still owe it because, again, it's a joint liability. And so they may have already collected and remitted that tax themselves, or accrued and remitted that tax. And in that case, as long as you, the seller, just get some sort of like, certification from them that they already paid the tax, then that actually lets the seller off the hook because it's really one or the other. Stefan, I don't know if you have any thoughts there, but yeah.
No, that's perfect.
Yeah.
Yeah, I don't need nothing to add
Nothing to
there.
add,
It's
yeah.
like, no, just leave it where it's at. Leave it where it's
Yeah,
at.
yeah.
So, now let's switch gears to the tech side. When implementing sales tax softwares, what's the most common thing that goes wrong?
Yeah, that's a great question. So I have clients, software clients that have a solution implemented. They have a
Mm-hmm.
solution implemented, and so it would seem that they're good to go. But the problem is sometimes the software is so complex, so there's not enough training, or the person that set up the software has been gone for 2 years. Sometimes something like that causes the software to not be configured correctly.
Okay.
And I know I had a client one time we were doing diligence on, or I guess it was a target we were doing diligence on, who had a kind of large, well-known, software solution for mid-market companies implemented, but they had the wrong product categorization. They had tagged it to custom software instead of like canned kind of software,
Mm-hmm.
which meant that they basically weren't collecting tax almost anywhere. And it was like a $15 million ARR company, and they had like an $800,000 liability. I mean, it was a huge liability, and
Yeah.
they had the software implemented. That's the crazy part. So really again, kind of the complexities of the software, who you go with is super important. And that's why, we're doing this podcast with Anrok because
Mm-hmm.
for my SaaS and software clients, Anrok's an awesome solution. Whereas with some other solutions, I've got to go through a quoting process to quote how much it's going to cost us to help them implement the software. With Anrok, there's no quote. I mean, it's like, hey, this is really very streamlined.
Mm-hmm.
They have great customer service. I think that's the thing that sticks out to me the most is, again, with some of the other larger competitors, everything's got to go through a ticket, and then you don't hear back, or the answer you get, it's not helpful. But with Anrok, there's like real customer service, and you get a response, and it's a real kind of, like a real response. Anyway, so it's been awesome to, for my clients. But yeah, Stephan, I don't know if you have thoughts on, different, like why Anrok is, is great. Because I know you came from obviously outside of Anrok, and so you have that perspective as well.
Yeah, go for it, Stephan.
Yeah. Okay. Thank you. Yeah, I got to say thank you. Anrok loves partnering actually with Bennett, Thrasher, and with Stephen in particular. The story that Stephen just shared about getting the taxability wrong, that does happen quite often. So I think that's why it is important to have a software provider that can support you, kind of providing like a cursory review, but also having a really tight partnership. Whenever there's anything questionable, I think we always send, our customers, to Stephen's way, say, hey, take a look at this and let us know if there's anything different that they should be doing, right? Because sometimes it can be delicate if you have a customer that has been mapped to the wrong category for a long time. They have to not only figure out, wow, I have prior period exposure, I have liability, but then they need to figure out how do I make these changes, and how do I voice this to my customers, my existing customers, right? And so there's a lot that goes into it, but it's been a fantastic partnership. And I would say about Anrok, the whole reason why I came into Anrok is after leaving Uber, I actually worked at a few different companies, and I found myself for every company that I joined, I was effectively building a lot of the same solutions, right? I mean, it's anybody that's dealt with tax at a company to mitigate risk. You run through a lot of the similar playbooks. And I was thinking to myself, man, this would be great if I can get some time back, on reconciliations. It would be amazing if I could just somehow streamline this process, where if I built this tool, at one place, I could just reuse it at another, right? And so the appeal to come to Anrok was like, hey, I can build a tool for like a future me, right? Let's say at a future company, or to help some of my friends get time back. And I think that's been wonderful in that, part of what we do in terms of like the product taxability is, we may be working on some things in the background. I can't really speak to it so much, but if you think about when you go to like buy something online, let's say at Amazon, and before you're going to check out, it's like, hey, before you go, similar customers may have purchased, these other things, and we just wanted to make sure that you were aware of them in case you wanted to add anything to your cart, right? You can imagine where most folks, if you're, in finance, you don't have a tax background, and you have these products, and you don't necessarily know how they should be categorized from a tax perspective, but maybe you have something that's telling you like, hey, similarly situated companies may have selected these categories, right, as something to check out.
Yeah.
That might make things a little bit easier for you. Might reduce some of that liability that you would typically see with assigning custom software when you really had canned software, right? So there's a lot of really great things I think about our product, and one of the things I did want to highlight, because this just came up in the past week, was we were talking about why do people care about sales tax. We talked about during diligence when you're acquiring companies, selling companies. One great thing about our product is that we make it seamless to integrate multiple sources of data, right? And I had this customer that actually shared this experience where they said, we acquired a company, we were on a mid-tier, a competitor of ours, and they said we happened to acquire a company that was also on that same software product, and we thought, great, this is going to be fantastic. We can just plug and play. It's the same software. But a limitation with that software was you only have one, let's call it like one socket, one plug where you can actually connect your data to. And so they said where they thought they were going to see synergies, they were still blocked. But with Anrok, you can actually, whether you're, trying to plug in Stripe, now Shopify, there's multiple data sources that you can plug in and make it really easy to track. And so just one quick thing, I guess, for all the M&A folks out there that may have acquired a company, whatever system that they're on, we make it pretty easy to just kind of plug and play so that you can keep it going.
Nice.
Yeah, absolutely. Yep.
All right. To wrap things up, what other gotchas or overlooked issues tend to catch software businesses by surprise when it comes to sales tax?
I mean, one thing that comes to mind for me is just VAT. If you're selling internationally, that's something that I really appreciate about Anrok because it's pretty streamlined in how, VAT and the Canadian, GST, HST, that's something that Anrok can handle. Whereas, some of the other software companies aren't able to do that. It's not maybe, I don't know if that's a gotcha per se, but that's something that comes to mind. Yeah.
It's an insight. It's a nice insight.
Oh, Stephan, go ahead, and I've got another one.
Oh,
Yeah, that's perfect. Actually, what's the other one you got?
Well, use tax. So if your use tax is when you are purchasing, if the seller doesn't charge you sales tax, but it's a taxable, good or service or something, then you technically owe use tax, and so that's something that is kind of a gotcha, I would say. And like typically for my clients, it's, they're located in one of the 22-ish states that tax SaaS, and their users are located there, but the SaaS provider is not charging them sales tax. So that would be like a typical, because sometimes those can be pretty big, dollar numbers that the software
and
spend.
what would cause a SaaS company to not charge tax?
That's the $1 million question. Yeah. Yeah. That's, I mean, again, that's
Is it
kind
just
of,
process? I'm curious
yeah.
about it.
I think it's the overall complexity. I mean, that's why I specialize in helping software companies because it's just, I don't know if it's not well known. I'm not sure why. I think maybe Stephan, to your point, they're kind of all gas and sales tax is a break. And so they're just not focused on it.
Okay.
Yeah, absolutely. I think what I wanted to say, maybe, this is like a good place to invite other questions if folks are watching this or listening and have these questions. I've like for a growing company, especially a rocket ship company, everybody is all about creating a frictionless checkout process. And so that just means the sales team is running things and they're like, by frictionless, they're like, we just want to onboard people as quickly as possible. And so when you tell them, hey, well, for tax purposes, we need to, like we were just talking about, making international sales, we need to collect their tax IDs, right? Because when we collect their tax IDs, we mitigate risk. So the sales team hears that and they're like, I hear noise. You're telling me that there's some kind of additional thing that our customers have to do to sign with us, and that's potentially a blocker, and I don't want to do it. And rather than having that, kind of some of that tension in some of these discussions, I've loved having a model, which Anrok does provide, where you actually put some numbers to the exposure, right? So that when you go into these conversations, you're like, okay, totally understand. We want to grow, but I just want to make sure what you're saying is you're willing to sign off. It looks like there's about $1 million of historic exposure in the last 3 years that we've incurred by not collecting these VAT IDs, right? So if you're comfortable with effectively having, maybe like $500,000 a year on average of exposure, and you're saying that you're willing to sign off on that, then I'm totally comfortable with that. I just want to make sure we're aligned.
Yeah.
Most folks, in my experience, once you drop those kind of numbers, nobody wants to throw money like that away. That's at least a few different deals, right?
Yeah.
And so it makes the conversation a lot easier. And so, yeah, that's one thing. Again, I love, even if I wasn't an Anrok, I love our exposure modeling tool. It's like one of my favorite things. I think a lot of folks do use it as a starting point for their ASC 450 model itself.
Yep.
They need to, fully burden their P&L. So, but yeah, hopefully that was helpful. If you have any other questions,
perspective,
feel free to reach out to us. Yeah.
Okay. If you could give one piece of advice to founders or CFOs about preventing future exposure, what would it be?
Yeah, sign up with Anrok.
Yeah, yeah.
Shameless plug.
Sign up with us. Yeah.
Yeah.
Yeah. We do monitor tax law changes. We bake it into the product. Super important. I know Stephen, also has publications they make available, so folks are aware of this. But yeah, I think having that tight partnership and really a learning that I had was really just partnering with the right service provider and getting that service. We've had a lot of customers that come to us because they've had just poor service, and they want somebody that's timely, that's giving them accurate information, right? But accurate information is useless if it comes like a week or a month later, right? So, I think both of our companies very, very responsive, and that's been something exciting.
Yeah.
That's a beautiful partnership.
Yeah.
Okay.
Yeah, for sure.
So I'll leave with this. There's a common question out there. When forced for one or the other, is it better to under-collect or over-collect tax?
I've got a perspective that's specifically to small mid-market companies, SaaS companies, which I would say probably over-collect. The real risk of over-collecting is class action lawsuit, which that's typically going to be reserved for gigantic companies.
Okay.
So, it really you shouldn't, you should just put in the solution, just put the time in to put the solution in to collect the right amount of taxes. But yeah, I guess if I have to answer the question, that's what I would say.
Okay.
Yeah. I think, under collection's rough. I mean, there's also other jurisdictions that impose key tam, issues where, like the Floridas of the world, and so I guess like the
That's
takeaway
true. That's
is
another one. Yeah.
yeah, you're kind of you're darned if you do and darned if you don't.
Yeah. Just
sort
get
of
it
deal.
right.
And so yeah, just get it right. Yeah.
Just do what you need to do.
Yeah.
Well, thank you both for being here, Stephen and Stephan. It was an absolute pleasure. So much information that was extremely informative for our listeners. So I really appreciate you all taking the time to chat with us on Beyond the Ledger. Thank you so much.
Thank you, Shardae, for hosting. You're most gracious. So,
Yeah. Thank you. Yeah. Appreciate it. It's fun.
You've been listening to Beyond the Ledger, brought to you by Bennett Thrasher. For more insights and resources, visit btcpa.net and subscribe on your favorite podcast platform. We'll see you next time for the next conversation.